Welcome back to the Stock Market Summary Series. Today, we saw some pretty solid green across the board. S&P 500, NASDAQ, Dow, they all climbed. NASDAQ even hit another all-time high. But here's where it gets really interesting. Despite all that green, there was this subtle technical signal, kind of a warning flare, maybe, hinting the market might be at a crossroads. We're going to unpack that signal. It's called a doji candlestick. Plus, we'll talk about why Apple finally made a big move after months and what Bitcoin seems to be winding up for. Stick around. We'll get into why this all matters. Oh, and before we jump in, just the usual reminder, nothing here is specific buy or sell advice. It's all just general market chat and, trading education. And hey, if you find these daily summaries helpful, please hit that like button. It doesn't cost you a thing, but it really helps us out. And click subscribe so you don't miss these updates. You can always unsubscribe later if you change your mind.
Yeah, it's fascinating, right? You've got this strong bullish feel, clear momentum upwards, but then the charts flash these little caution signs. So today we'll look at the big picture, some stocks that stood out, the latest econ data, and check in on crypto and metals too.
Okay, so let's recap the action. S&P 500 up 0.48%. NASDAQ adds 0.65%, like I said, new highs. And the Dow, a solid 0.61% gain. Good numbers.
Good headline numbers, definitely. But connecting it to that bigger picture, all three of those main index ETFs, SPY for the S&P, QQQ for NASDAQ, DIA for the Dow, they all printed doji candlesticks today.
Okay, the doji. Explain that a bit more. What does that pattern tell us?
Right, so doji basically means the price opened and closed at almost the exact same level for the day.
Yeah.
Think of it like a tug of war where neither side won. Indecision. Big indecision, actually. Now, here's the kicker. Combine that doji with the S&P's RSI 14, that's a momentum gauge sitting well above 70. That zone often screams overbought.
So high momentum meets high indecision. That feels significant.
It can be, yeah. It suggests maybe a stall, maybe even a reversal is possible. It's not a guarantee this market can keep running like crazy, but it raises the probability of a pause. It's one of those moments where, managing risk becomes even more critical.
Makes sense. So watch that signal closely. And amidst that broader indecision, some individual stocks really stood out. We've been mentioning Apple, AAPL for weeks.
And it finally popped. Yeah, really nice move today on big volume, too. Broke out of that long consolidation range it was stuck in, between roughly 215 and the low 190s.
And Big Bear AI, BBAI, another big jump.
Yep, impressive. Up 16% today, also on rising volume. That's building on the, 46% gain it had last week that we flagged on Friday.
Wow.
These moves just underline how important it is to read volume and understand those consolidation patterns. Spotting the setup, managing the risk. That's how you let winners run. It's core to what we teach.
And sector-wise?
Tech, XLK, was the leader today, up almost 1%. Energy, XLE, and oil and gas, XOP, they were the laggards, down about 0.5% and over 1% respectively.
By the way, guys, if you've got a stock you're watching or a question about the markets, drop it in the comments below. We might just cover it in an upcoming summary. All right, let's pivot quickly to the economy. We got some Q1 GDP data revised.
Yeah, revised slightly worse, actually. Showed the U.S. economy contracted at a 0.5% annual rate in Q1 2025. A bit weaker than expected. Mainly looked like soft consumer spending.
But not all bad news, right? Durable goods.
No, definitely not. Durable goods orders for May were surprisingly strong. Rose 16.4%, blew past the forecasts. And consumer confidence for June came in at 93.7. Some concerns about tariffs maybe weighing there.
And the Fed. Anything new from Powell?
No new testimony today. Powell recently emphasized being cautious on rate cuts, and that measured approach seems to be holding.
Okay, let's check crypto. Bitcoin, BTC.
Slipped a bit today, down about 0.65%. But the main story is it's still coiling. Really tight multi-day consolidation right around that $108,000 level.
Coiling, like building energy.
Exactly. That's the setup we pointed out last Friday. We're still bullish as long as it holds above its key moving averages, the 20-day and 50-day, watching for a break higher.
And metals. Gold and silver.
Gold, GLD, and a nice bounce, up 1.2% from that $300 level. Trying to stabilize after that drop last Friday.
Okay.
Silver, SLV, also ticked up about 0.58%. It tagged its 20-day moving average. It's still sort of trying to make up its mind.
Okay.
Both are definitely on the watch list to see if they can hold these levels and follow through. Again, classic technical analysis stuff we dig into in the mentorship.
So pulling it all together, what's the main takeaway for you today?
Well, the action still points towards bullish continuation for the main indices, SPY, GQQ, DIA.
But that doji candlestick across the board.
Right. That, plus seeing the small caps, IWM, struggling right at their 200-day moving average. It's a signal for caution. Don't ignore the uptrend, but maybe tighten stops. Be aware.
So a market pushing higher but flashing these little yellow lights.
Exactly. Days like today, I mean, with Apple's big breakout, Bitcoin coiling tightly, and those doji signals everywhere, it really shows why understanding these patterns, managing risk, knowing when momentum might be fading, why it's all so crucial. That's precisely why our mentorship program focuses so heavily on reading candlesticks, managing signals like overbought RSI, spotting setups, and just hammering home capital and risk management. It's about learning to let winners run and cut losers fast. It's a serious program designed for real results.
Makes sense. All right, one last reminder, have a ticker you want us to break down, drop it in the comments. We love seeing what you're watching. We'll catch you in the next summary.